Is Fiserv worth the buy or not? We'll take a look. We'll look at the numbers and see who Fiserv is and why they had such a huge drop and what's expected into next year. Let's take a look. So Fiserv is a global payments company. Think of banks and financial institutions, credit unions, and that use Fiserv's platform. They have digital banking and mobile banking solutions. They have debit and credit card processing. They do bill pay. They do merchant processing. Think of POS devices when you're swiping your card. That's the kind of things that these guys do. And they started in 1984. They serve several hundred clients in several hundred countries. They're a pretty big company. What happened the other day was a big miss and a big reset. That was more important is the reset and what their forward guidance is into next year. And that caused the stock price to plummet. And take a look here. Here's where we are. We're about $120, $130 a share prior to earnings. And then after earnings, we're now down to 60. So do we buy this or not? Is now the right time to buy? When you take a look at the earnings call, Mike Lyons indicated that they had overly optimistic expectations for next year. Think of your top line revenue and your revenue growth. They were expecting 10 to 12% next year. They've actually readjusted that and dropped it to 3 or 4%. That's a big, big difference. They adjusted their earnings per share down. Everything was basically reset for next year. There was a couple of things that were working in their favor. One was that very little people know about is Argentinian hyperinflation. Argentina had runaway inflation. That actually helped Fiserv's numbers and gave them about a 10 percentage point increase in their revenue. That tailwind is now gone. So that's one of the things that caused them to have to adjust their expectations. Another thing is he's just becoming a little bit more realistic. There were things like deferred investments. There were things that the previous CEO would do, like cut costs, defer investments, which improved short-term margins, but limited client service, product launches, revenue potential. So he did things that made that quarter look good, but it wasn't good for the company in the long haul. And those of us who are in the financial services industry, I don't know about you guys, but my opinion is I've never been a big fan of Fiserv. I think their service lacks and they definitely need some improvement. So hopefully Mike Lyons will be able to get in there and fix some of this stuff. So they're going to do this new strategy called One Fiserv, which is a 5-point plan, and it's going to put the clients first, and they're going to work on driving operational efficiency. And hopefully they'll get a little bit better with their service and their current offerings as well. They do lack in this area. The other thing that was notable was a huge change in the leadership ranks. Mike Lyons is new. He started in May. He brought in a new CFO from Global Payments. There are new people sitting on the board. He brought in several executives from JP Morgan, BlackRock, Stripe. So there's going to be a huge shift in the leadership team. So hopefully, all that said, that's going to be a little bit better for Fiserv in the long run. They're going to be spending lots of money bringing in these execs, but hopefully it'll be the best thing for Fiserv. So let's take a look at some of the numbers and compare them to some of their peers, and then we'll determine whether they're a buy or not right now. All right, so I've got 3 competitors up here. Actually, I've got 2 competitors and Fiserv. Jack Henry, same type of company. They do a lot of online banking and processing, and then Global Payments. So you can see Fiserv is the big one here. $5.5 billion, $5.26 billion in revenue, top line revenue. That's your total sales. With Global Payments at $2 billion and Jack Henry at $644 million. Take a look at their operating margin just to see how they compare against each other. So operating margin is top line revenue minus cost of goods sold, and that's your gross profits. It's basically your gross profit divided by your total revenue. And right here, all of them are within range. They're 25, 30%. It's not bad. They're all relative to each other. It's not a bad number. But let's take a look at what their price to earnings ratio is. So now what we're going to do is take the top line revenue minus cost of goods sold. We've got our operating margin. And now we're going to look at your net income. And we'll look at that, and that's called your price to earnings ratio. So that's your earnings is another word for net income. And we'll compare that and see how they compare against each other. All right, and I've put it in terms of a percentage so that you can see a ratio so that you can easily compare other companies. And when you look at what the price of the stock is compared to what their earnings are, this is the price to earnings per share. So looking at the last 5 years, you've got this red line here that is Fiserv, and the yellow is Jack Henry. And you can see they've been running along well with each other. Jack Henry's at about a 25 PE. Not bad. It's kind of what you'd expect for a company on the stock market. You have to do a lot more analysis to find out if that's worth it or not. But taking a look at Fiserv, they were running around 20, and then now that the price is tanked and everything's been reset, now we're at a 9.5 PE. That seems, if you were just to look at it just at the surface, right now it's a better buy than Jack Henry, all things being equal. But you got to look underneath the surface. Let's take a look at what some of the analysts are saying. So this is 26 analysts. These are guys that get paid to do this for a living. I take a few minutes and I take a look. These guys analyze these companies like to death. So when you look at this, your lowest analyst on here is pricing it at $50 a share, with your highest at $220. This guy probably did not do a reset, but the average of all 26 analysts is around $90 a share. We're trading right around $60 right now. So is it a good buy? Don't know yet. This number here is what caused everything to be reset downward. So here's your Q3. There's their miss. There was the estimate was $2.64 per share for earnings, and ended up coming in at $2.04. But companies don't really care about this. They care about what it looks like ahead, and everything was revised downward. From a technical perspective, everything is on a sell signal. Momentum, relative strength, everything that's out there is saying that it's on a sell signal. Now, this is just technical and fundamentals, what we are looking at, price to earnings, the story behind the company. That is what makes whether it's a buy or not. I look at this, I take it with a grain of salt, and I move on. All right, one last thing I want to show you are the analyst downgrades. So take a look at October 30th. What we're looking at is another platform that I like to use just to see what other analysts are saying, what companies downgraded, upgraded, and so on and so forth. So take a look at this right here. I'm going to draw your eyes to the center of the screen, and you can see the downgrades that happened on earnings day for Fiserv. There's Bernstein, Argus, Goldman, TD Cohen. So you have several different analysts and what their position is, what their ranking is, and if they downgraded, upgraded. So these guys, like, they downgraded to a hold. These guys neutral, equal weight, neutral, peer perform, equal weight. This guy has an outperform. Oppenheimer has an outperform, and they have their target at $91 a share. Some of these other guys that downgraded, you can see they just downgraded to $80 a share. 62 BNP downgraded to $62 a share. Goldman at 79. And anyways, you can see that. You can go out there to Yahoo Finance or other providers, and they will provide you with the analyst ratings. But my take, if you want my personal opinion, I have dealt with Fiserv in the past. I am not a big fan. I'm going to wait and see. I do not own any stock, and I won't own any stock. I'm going to wait to see what Mike Lyons does in the next few months, see what his plan is for next year, see how it works out. It's going to take 6 months or longer for his One Fiserv strategy to really take hold. I will make a determination then. I think there are better buys out there. Right now, I wouldn't buy it. There's too many risks. We got to see how this plays out. Now, the positive is if you do hold it, you really don't have only to go up from here. He did reset everything. This allowed him to do sweeping changes across the company. So anything's got to be better than staying where they were. So with that, I hope you enjoyed this video. Take care. Happy trading. Be safe.